It's stocks set for new all-time highs on as investors have embraced the prospect that the June jobs report will push the Federal Reserve closer to a rate cut. For more on what this means and for what this means for your portfolio, let's welcome in John Solfus, Oppenheimer Chief Investment Strategist. John, thank you for joining us here today. We've been waxing poetic about Fridays and jobs and everything else. Just what's your first blush take on the jobs report this morning?
Came in fine as far as I'm concerned. When we looked at it, if it's anything that it states very clearly to us is jobs remains resilient, even though we have seen slowing off the higher numbers that we used to get. That's not that has to be expected. The Fed has raised 11 times and has been on pause for 8 times now since March of 22nd through today. When you look at it, essentially, the Fed's done the job. They have a little bit further to go. 2% target on inflation remains somewhat elusive. But in the meantime, they have yet to push the economy into a recession. That resilience shows in business. It shows even in the consumer. And it certainly shows up in the job postings. So the economy appears to be larger than the negative pitch book at this time. We think that's good for equities.
And John, what is your year-end target for the S&P 500 here?
My year-end target has been exceeded twice this week in terms of the closing price. It's been exceeded several times in the last 5 or 6 days, but those were intermarket moves. But closing prices twice now in succession, and it looks like it's going to happen again today. We'll be reviewing our target over the weekend. That's all I can say. Whatever we'll do with it, you'll find out on Monday.
Can I ask you your honest opinion here about these targets, these price targets? A lot of times they're for 12 months or end of the year. What do you say to investors with how serious should investors be taking these?
Well, I think the most important thing that we'd have to think of here, Jared, is that the importance of the target really is it's kind of the fun part of the game for strategists and the press, as well as investors who like to see what it is in terms of what's the direction. That's what really counts. Are you looking for gains this year or not? We started this year. Well, last year in December, we put in a 5,200 target for the S&P 500 for this year. It was one, if not the highest target on the street. People thought we were nuts. It was exceeded sometime in the first quarter. We raised it at that time to 5,500. And now we've got to think about what we're going to do from here. And it's our targets are based on very much on fundamentals. It has to be the trends that we see both in economic data as well as in revenue growth and earnings growth, primarily in the S&P 500, as it right now is the leading index in the way this economy is structured.